Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We are looking at Tesla once again. And I know it's been a while. If you're one of my regular Tesla subscribers, I do want to say I'm back, baby. What a busy October we had, but things are turning up. Happy Halloween. Now, things are turning up as long as you are not Tesla, because as you can tell here, yeah, we're up 1.76% for the day, but we are down 7.24% for the week. We're down 23.8% for the rolling 15 days, and we're down 18.53% over 20. Yikes. Yikes, yikes, yikes. And I can only say that when I look at the actual trade range, that this is the type of move that you would expect because Tesla here bottomed, it looks like on the 18th at $215. It came back down to this level. It sliced right on through it, and it's not looking back. This thing will be lucky if it doesn't bounce off at 215 and essentially collapse back down to maybe right now, maybe that like 150, 160 level. The only reason why I say that is because things have definitely changed in how the market is reacting. The way that Tesla is exemplifying the type of change in the market is not really boding well because Tesla's been a leader to the upside, and I think Tesla could definitely be a leader to the downside. So we'll be very cautious. Now, outside of just Tesla here, one of the things I do want to call out is if you look at this bull sentiment, we're still in a VIX warning, still in a VIX watch, still in the storm brewing, still in a VIX bull rising. Those are very negative. Things don't look good for the overall market. As you can see down here, we definitely want to call it that we did flip to a macro season bear market. We did flip to a micro weather bear market as well very recently. But just as of last Friday, the 27th of October, macro season bear market. So be careful there. And if you're curious about how you would have learned about that, you could have actually subscribed to the New High newsletter, which is something that we send out every single Sunday. You can go ahead and subscribe here at bootlegmacro.beehive.com/subscribe. We send out and give updates every single week to our subscribers. But back to what we're talking about specifically with Tesla, one of the things that I want to call out is if you look at its VIX correlation. Now, the VIX correlation right now is negative 82.7%. It is actually up here in this little graph. One of the things is that as it's falling and the VIX continues to rise, that tells you that Tesla is really not only highly correlated specifically to the way that the S&P is going to move, but the broader market. So that's why I continue to believe that Tesla is one of those stocks that you can follow and it will lead to the upside or downside. Currently, as you can tell in the rolling returns of just the past 60 days, things are down nearly 20%. I mean, yes, over 6 months, we're still up 19. But if we look, and I'm actually going to update the weekly data here because I can tell that it's not necessarily coming through properly. We're going to go ahead and look at it through the end of last week. Go ahead and update that. It should update in here. One of the things that you'll notice is that Tesla essentially has gone nowhere. Over 1 year, this thing it's down 10%, which when you think about the volatility of Tesla, that is quite a ride that you've been on. But essentially that means nothing because Tesla over 3 months, over 1 month, over 15 days, over 5 days it can move the same amount that it's moved in the year. What we want to be conscious of is, are we going to get a bounce? And when I look at the overall chart and I look at the overall data, I can see here the price, right? Like the day that it really fell, if we want to look, like we got a volume spike here on the 19th when it fell all the way down to 220. You can see we saw 170 million shares traded that day. And that was the exact day that the price fell below the 5-day moving average and the 23-day moving average. I mean, it already been below its 5-day moving average back on the 13th here, which was a good indication that things were probably going to turn, as well as you can see the price to fall on the price future path. We'd officially flipped back from a price to rise to a price to fall as of this day when you get 2 in a row. That's the confirming. And honestly, based on how I look at the world, this 1 month flip here, negative in the rolling return, was really a great signal to say that this was going to be something quite negative. You didn't know exactly what it was going to be. If you're paying attention to the catalyst, I believe there was an earnings release. I believe there was some sort of announcement from the company. But overall, the indicators from the market were telling you things were getting quite negative for Tesla long before we got to the 19th of October. But when we look at where we are now on the 31st on Halloween, things look even more dire. And I say that with a lot of love and respect because I know a lot of people are in this individual stock and they wear this stock. Like people will own this stock down to $0 if, God forbid, we get there. But right now, things just look ugly. I mean, the 23-day moving average is at $236. The 5-day is at $204. So you're still significantly underneath it already. And that is diving down probably below $200 pretty quickly. And once you get below 200, I think it'll be really hard to break back above it under these conditions, unless you get some sort of just like unnatural market snap. Volatility is incredibly high in Tesla at the moment. Price is still expected to fall. We're negative on the 5-day, 15-day, 1 month, 3 month. The 6 month, we are positive, but you can see that it is declining quite a bit. We've still not yet gone negative on the 6 month return of Tesla. So you do have that as a long-term indicator that potentially there's some still upward movement and you want to believe in that. We're go short in the short term, intermediate term, and longer term. We are bearish in the short term, intermediate term, and longer term. We're short-term bearish, which means we're getting more bearishness recently as of over the past like 20 days or so. You can see we've got a falling bear in the rolling sentiment. We are in the blue zones, which means that we are essentially so negative that I would expect a snapback in some capacity, even though right now we're not seeing it. I mean, I guess today we saw it to a certain extent, but it's so negative in Tesla that you really just want to respect kind of the falling knife until it hits the ground, until it bounces. Now, if we look here on the trading signals, we do see that we're getting a coming rising bull. This is an indication that we're seeing some sort of resumption of a rising bull here. We can see that the falling bears, it's got to end at a certain point. We're down at 36% bullishness. We were at 31%, so we have risen off of that level, but we did hit 30, then 31, went up to 37, and then fell back down to 31. So you want to be conscious of how this can work. This is one of those experiences. It's like looking at waves in the ocean. They can just keep crashing and setting back up. And the reason why that is because what I called out earlier around the VIX. If we look at the VIX, we've had a VIX warning since the 16th. We've got a VIX watch since the 24th. We've got a storm brewing since the 24th. Things just do not look good. And Tesla, again, because of its high correlation to the VIX, it lets you truly know that it's really correlated to the overall market, and the market follows the way that Tesla moves. I mean, if you look at the weekly on Tesla, this goes all the way back to, it looks like, what are we losing? We've lost a lot of 2020. Now we're in summer of 2020. If we look here, you can essentially see that we've made progress to the up and to the down, but in all honesty, we're up 100% over the course of like 3 years. Like you were at $100 back in July of 2020, and now you're at 200. It's been an enjoyable ride, but it just depends on what you're in it for. Now that's a great return, but this kind of experience, unless you really enjoy the Yanks, or let's say you are a dollar cost average kind of intense buyer of Tesla who just is going to buy it all the time, this isn't really that great. And the reason why I say it is because if you spent time up at 400 and you spent time down at 100, now you're at 200. Yeah, you're probably like, okay, but it still wasn't a great experience. You're essentially would be at break even depending on how much time you spend and how much you were buying. You might even be underwater because you probably spent more time buying here in 2022 and in 2020, where you were expecting the price to be above 200 and now you're kind of around it. So if we look at what the charts are telling us, this 200 level is a really important level. We want to be very conscious about what's happening here in the price action. We want to be aware that we still are under the 50% in terms of the bullishness in the overall market. We did hit a high of 41% as of recently. We fell back down a little bit. And again, that's a high as of where we've been over the past week or so. We want to see it around that 50% level. We want to see the green bar up above this black line, which is the 15-day moving average of the bullishness. What we want to see is volume breaking out as prices breaking out. What we want to see is volatility breaking out, and we want to see correlation with it. But instead, you're seeing correlation diving and negative. You're seeing correlation be incredibly negative, and you're seeing volatility break out. Volatility has been breaking out since the 9th and has been going higher, while correlation continues to get negative and stay negative. Not a good recipe for higher prices, because two negatives definitely make a positive, and two opposites definitely don't make anything good there. So if we look at the overall trade range, this is going to be an indication based on the volatility breaking out. You can go all the way up to 297, doubt it. We can go all the way down to 186, more likely. And what I don't like is that while this is getting a little bit higher, it's not getting higher than the price was back here at 305 in July, but this price is diving lower more quickly. So this is the lowest price if we look at the bottom of the range at 179 since June of 2023. So you've essentially, now we're at the place, and this is really important, I think, overall for the market, we're essentially at the place where we've given up the entire summer. We've given up the entire summer in these large companies and these large stocks, and now we need to be really conscious about what gets reflected in the rest of the broader market, because this, while we could get a bounce, yes, we could definitely go up to like 250. We could bounce to 215. We could bounce to 225. I don't know, because even on the weekly, we are at the bottom here, right? So the weekly for Tesla is 207. We're very close. The very top is 302, which is interesting because the top is 302 on the weekly here, and you're looking at this all the way through 297. Now, I'm not sure if this is exactly right, because I think this is, no, yes, it's going through the 27th. I just don't know if it's necessary. Oh, so there's the 27th. The 27th, so through last week, is 297, and that's the exact same high level on the daily. So you could see that potentially you could get up to that price because it would be a magnet on both, but you'd want to be conscious of the fact that even if you get up there, I mean, you're really just coming back down eventually. So we want to be really aware of what's happening, want to really protect our stops, really want to protect our risk. But tell me what you think in the comments below. You're long, you're short, you like it, you love it, or do you even think this is a good review? Subscribe to the New High newsletter. You get everything you want, 25 stocks to your inbox, always hit new highs. We don't have a huge list right now, but the market's kind of screwed. But you want to subscribe so you have an idea of what to do next week. But I'll talk to you soon.